Hello people, today I'm gonna show you another example of how you could trade a retracement. This is one of the biggest chart. Okay, so what I'm gonna do here, guys, I'm just gonna do my pre-analysis. Okay, so what I'm looking at today, I'm looking at this particular candle that's about to form. Okay, so what I'm gonna do, let me just bring in my vertical and horizontal line, then I could just mark it up, then we could take it from there. So today is on the 7th of January 903. Look at the top left hand corner. So in other words, like I say, the strategy we're going to use in this particular example is the first visit to the sweet spot, right? The previous day closed and current day open, the high and low of the day. It's simple. So I'm on this particular day, so I'm going to do my pre-analysis. Okay, my pre-analysis, I'm going to go to the Forex Factory website to see whether we've got any news related events on this particular day. So what I'm going to do is, like, I'm going to pop into the Forex Factory, 7th of January. That's right here. Look at this, guys. We've got the Swiss franc news here at 7:30 a.m. Then we got news on the USD like at 3 p.m. Okay, this is the Swiss franc, right? So if you look at this particular currency, the Swiss franc is in Europe, so it's somehow correct to the pound, because Switzerland and UK, they do have trade deals and people buy stuff in Switzerland and all that sort of stuff. So when you got news on Swiss franc, the news will inject volume into any other British pound related pairs. So you got the pound USD will be affected pretty much as the pound card, and you got the pound JPY and all these other pairs. So when you got that we got news, we expect to see volume into the market. That's the reason why we look at the Forex Factory. Like I say to you guys, we don't use the volume indicators and all this nonsense we get, like about order flows and all these like liquidity sweeps. We don't, because it's a lot of garbage. Because the reason why I say that, when it's in market time, volume time, you never see those levels, those fair value gaps and all these what do you call it, order flows. Nobody could see where these smart money positions are. People could lie to you, say, oh, this is where these smart money positions are, and all this is a lot of bull. You can't see that. All you can see is like what's in front of you. Okay, so the candlesticks will tell you a story. Obviously in this particular example, these are candlesticks, but they are range chart candles. Okay, so they will tell you a story. That's all that you need. Okay, so I'm gonna break down this chart for you guys right now. Okay, so what I'm gonna do here, guess what I'm gonna do? I'm gonna look at two particular candles, right, before we get to this particular position we are at the moment. So if I look on here, guys, look at this, guys. We on the Monday, the 6th of January, 7:32, right? Look what this candle did. It took about roughly about 5 hours. No, 4 hours, 5 hours. Yeah, you can say that. Look at the next candle, the 6th of January, 12:02. Look what time it closes. 9:03 the next day. Look at that, guys. That's the massive. It took the whole day to actually form out this candle. And if you look at this candle, if you've done candlestick analysis and all that, I mean, on the normal candlesticks, that's a hanging man. It's a bullish hanging man. It's a tired candle. Okay, look at this. It's a small body and long wick. It tells you price did push all the way up here, although it closed up here, but it took so much time. Okay, it took so much time. Look where it opened. It opened right here. Guess what it did? It even dare reach that, the resistance sweet spot. So in other words, when we see that, we actually see that, you know what, bulls kind of like they are in trouble. They would even attempt to reach the resistance sweet spot. Okay, so we are just sitting on the sidelines. Okay, because we know we are poised to trade the bullish continuation. But when we see something like this about this time element, we know that the bulls are in trouble. So guess what I'm gonna do? What I'm gonna do is I'm gonna mark the chart. I've marked the chart already. Vertical line, horizontal line, right? So what I want now, I want price to reach either this sweet spot in a bullish continuation or the bottom sweet spot. Okay, so guess what I'm gonna do? I'm gonna bring in my shapes to and mark the whole box. Can you see that? All right. So what I'm gonna do next, I'm just gonna drop it down to this smaller red chart. That's what I'm gonna do. Okay, put the figures in there. Okay, let me just close this window. So what we're gonna do now, we're just gonna go back and look for our positions. So where we are, we got the markings, properties, and check that. This is simple, guys. So I'm gonna move back. Let me just minimize the chart, zoom in, then you'll be able to see. Okay. Can you see, guys? Can you see where we are, guys? Price have closed out of the box from the downside. See, so when you're trading retracement, guys, trading retracement is not easy. It's hard because you don't see so much information, right? But as you can see here, this move is just, it's a massive move. As you can see here, guys, look, it started from there. Look where you went. You went all the way here, 322 pips. So in other words, so like I say to you guys, price didn't even dare attempt to go to the resistance sweet spot, which is right up here. What price did? It came down and closed right here, out of the box. What can we see? What's our confirmation here? We got the reversal indicator right here. But have we got the H4 arrow? No, we haven't got. So what I'm gonna do, guys, now, what I'm gonna do, I'll show you something. I'm gonna mark the opening of the candle after price has gone out of the box. So I'm gonna do is like I'm gonna bring in my vertical line 2 and bring in my horizontal 2. I'm gonna extend this box and I'll show you something. I'll bring my shapes to a rectangular. Let me just extend the box. So what I'm gonna do now is, because I want a bit of some confirmation, because we are trading a retracement. So I'm gonna drop it to another smaller range chart to see whether we can see anything that will convince us to think, you know what, I think we are in a downtrend retracement. Sorry. I'll just put like 4 here. Okay. So I'm gonna go to a smaller time frame. Okay, our chart is on the right now, so I'm gonna do is I'm gonna move the chart to. Let me just zoom in. Zoom in. We're looking for this 7th of January. 7th. Okay. There we are. So let me just zoom out. Let's see something. Zoom out again. Okay, there we are. Let me zoom out again. There you go. Can you see that, guys? See where we are? Price is managed to get out there. Can you see where we are now? We got the H4 arrow as our indicator. Confirmation. We got that still standing, the forex reversal indicator. Let me bring the 20 moving average, see where we got the 20-day moving average lined up. Trend 20 moving average, slap it on it. You see that, guys? Price is below it. Guess what we're gonna do? Market execution here. Simple. And we could milk it. So it depends where you want to take your profit, guys. If we are conservative, we're not greedy, 16 pips. Or we could just push it all the way here, 40 pips. Right, guys. It's a retracement. Why? Because price is above the previous day close, currently open. this is when you could actually trade a retracement. But I mean, if you don't know how to trade, guys, if you're new to trading, do not trade retracements, because there's not much information you can see, and after the time, if you don't know what you're looking at, you get blitzed. You get blown. Your account gets blown out. So that's all I'll show you if you wanted to trade a retracement, guys. I think that's enough of me today. So guys, I'll see you in the next chapter. Happy trading.